Today, I want to show you the difference between stop orders and limit orders. A lot of beginners in forex do confuse the two and they don't know which one they can place. So it makes them they run away from pending orders. Stop orders and limit orders are all examples of pending orders. To distinguish the two, what you just simply need is the price level. Currently, price is at this level right now. It's dangling around this point that you are seeing. That's where price is. Now, you can decide to say, if this price reaches this level, you want to buy. I can decide to say, if this price comes down to this level, I want to go in for a buy. Why am I buying? You are buying because you think price will reverse at this point. Since price came down here and pushed up, it means you are likely thinking price will come down over here and then it will reverse. So when you anticipate that price that is above will come down to a certain point like this, and then it will reverse and continue the buy upwards, it means you need to use a limit order. So I will place a limit order for a buy here. So it will be a buy limit. You place it here. And when this price comes down, it will buy the market. And if it actually goes the direction that you predicted, reverse from that point and moved up, you begin to make profit. If it continues down, you will start having losses. That is why you will need stop losses. So a limit order opposes the direction of the price. So you are predicting by opposing the direction of the price. I have explained about buy limits. The video will pop up right now. Whereas for those that are using stop orders, they are anticipating that a major point of support or a demand zone, as some may call this point, where price seems not to pass, is called a support level. They think that is going to be broken. So they are hoping that when price breaks past a major support level and reaches their point of interest, that is where they will enter the market and continue in the direction of the price. So since price is supposed to return at a support level, push back, when it reaches here, it pushes back. If it fails to push back, but rather it breaks, those that use stop orders will now enter. So if you place a stop order around here, once price touches it, it will sell the market. Okay. So it means you are predicting that price will keep selling downward. So you will use a sell stop. So it means for a stop order, you are predicting that price will go the direction that it is coming. So price is currently up and you think when it comes down and it touches the point where you think it shouldn't reach and it passes to come and reach that point by breaking a support zone, it means it is ready to continue selling. So you will use a sell stop order at this point. So whereas if you think when it reaches, it will reverse, you will use a buy limit to enter the market at this point. Whereas if we come back to the upper point, we draw this same point here, market is finding it difficult to pass through this point, this region. So it reached here, it was pushed down, it came back here again, it was pushed down. So what it simply means is that market is finding it difficult to break past this supply zone, as some may call it, or a resistance of which is difficult for it to break past. So for those using limit orders now, okay, since they know that anytime price reaches here, it will push down, they will now use a limit order to enter, which means they will start selling the market at that point. So they will enter with a sell limit order. You put it at around this point, and then they will sell. They'll put their stop loss just somewhere a little bit above, expecting the market to keep pushing downward like this, in this direction. Whereas for somebody that thinks if price comes up over here, if price keeps, let's say from here, it keeps coming over here, and then it reaches here, it pushes down a bit, and the person predicted that instead of pushing down permanently, this price is going to break past this level. They will place their stop order over here. Their stop order will be over here at the top, with the hope that if price should break past this resistance point and get to their place where they are predicting, if it gets to this point, it means the market is ready to continue to buy and move upward. So in that case, they will place a buy stop order, which means if it is activated, they believe that the market should continue to push up. So market will continue to push upward. So if you are predicting that when price touches this point by breaking this resistance, you will continue to flow together in the direction of the market. So you use a buy stop so that when it touches you, you will go in the direction of the market. That is what stop orders do and limit orders do in forex. And then one last difference again before I close is that for a limit order, the price must be respected. It must be respected. When you place a limit order, it is very strict, which means if I say that I want to buy something, if I place a limit order, okay, let's say I place a limit order at 1.30, which means if price gets to this point, I want to enter for a sell. Let's assume I want to enter for a sell. So if price comes back, touches this point, I will now enter for a sell and then sell the market downward. But let's assume that you use 100 lot size and the number of people willing to
buy from you
at this price point, the maximum they have is 50 lot size. Because you have requested that you will only sell at 1.3, and those willing to buy from you at this level are only having 50 lot size, not 100. It means they can only buy half from you. So if you use a limit order and the amount of people cannot completely fulfill your order, only half of it will be fulfilled because you want it to be strict by using a limit order. So it means you have to wait for price again to come. So price will have to come back the second time again. And then if the number of people here that are willing to buy from you at this price are 20 lot size worth of buyers, it means you will still have extra 30 lots remaining to sell. And you still say that it must be at this point. Again, the price comes back to this point and you are selling again. If the number of people that are willing to buy from you that are having up to 30 lot size, then they can now completely fulfill your order. Your order was filled after 3 times, 1, 2, 3, before your order was completely filled. That is for people that have a lot of money that they use in entering the market. If you're on YouTube and you are searching for a video such as this, the honest truth is you don't have the money. We are talking about bankers. We are talking about institutions, large institutions that enter the market with billions of dollars and not with $1,000 or $10,000. Those ones don't move the market. They are the ones that cause all these things that you are seeing. They are willing to sell at a specific limit price. So when price reaches that level, they sell at a large amount and it pushes the market down. And they are not willing to keep selling at any other price except at a specific price. So they use limit orders. So in the moment it goes back to that point again, they sell it out. So remember, for each touch that it is touching this point, that the person that is having large amount of the asset is willing to sell at that point, for every touch it touches is reducing the amount that he's selling until it's completely sold. When it's completely sold, that's when you see that the market breaks and passes the resistance point. That is what a limit order is, and it's limit orders that triggers all these points of resistance and point of support that you are seeing on your chart. Whereas for stop orders, if you are placing a stop order at this 1.3, you are simply telling your broker that if price reaches 1.3, I want to get into the market. So if you are using 100 lot size to enter the market, and there are people willing to buy from you at 1.3, if they are 50 in number, it means you will grab the 1.3 there. And if price reduces and reaches, let's say, this point here, and there are other 20 people willing to buy from you at 1.29, they will now be included as part of your orders. So 50 for 1.3, 20, let's say for 1.29 at around that point. And then you could have again to those at 1.294 at this level again. So a stop order ensures that your order is filled at different prices, is not at a specific price. So you want it, if it gets to 1.3, you are willing to start selling there. Yes, as price is dropping, any other person less than that, you still want to grab to ensure that you sell all what you are having. That is another big difference between stop orders. So stop orders are not strict. Once it is there, it will fulfill the order at any available price just to complete your order. But for limit orders, it must be at that price. If you are using a very large amount of money to enter the market, you may not have enough people to fulfill your orders. In that way, you have the order partially filled. These things for most traders, they may not experience this using limit orders or stop orders, because let me tell you the truth, your $1 million cannot do anything in this market. It will be swallowed up within 1 second. Yes, within 1 second, because there are large institutions that are dealing with billions of dollars. Those are the people that their orders may not be completely filled. In that case, the market has to push down and retrace and go back again. They will sell it at that same price that they want. They are called the market makers. They are large institutions. So that is all about stop orders and limit orders in Forex. If you have any question regarding this, let me know in the comment section. And remember, you can also join my free WhatsApp channel and my free Telegram channel. The links are in the description, and you can ask any question over there. I will answer you, and I can also make videos on demand. Have a nice day. Bye.